Hi guys, welcome back to the channel. And today, as I promised yesterday, I'm going to be analyzing India's top 3 chemical companies. And trust me, the chemical companies are such, they can multiply your wealth like anything. If you want to have a look at it, have a look at SRF, have a look at RT Industries, have a look at any company that you pick up will show you very, very good returns. Now, what I'm going to talk about today are these 3 top companies, which are RT Industries, 𝐿𝐘𝐬𝐿, and the Deepak Nitrite. Before I go on there, I'm your host, Dr. Seema Jain, a SEBI registered research analyst. I want to also tell you people that we do live trading every single day, and people make a lot of money along with us. They trade along with us and they make good money. The link of that webinar you can find in the description box. Just click for the description box and you'll be able to find the link. You will be able to find the link of my Telegram channel where I keep posting my findings, good research that I keep on posting. So let's start. And I'm going to compare RT, 𝐿𝐾𝐬𝐿, and Deepak Nitrite, and 3 of them are top-notch India's chemical companies. So let me take you to screener.in, and there we're going to understand each company one by one. So first and foremost, I'm going to talk about RT Industries, and we'll have a look at this company and see how's the company performing. So here is the RT Industries. It's about 26,000 crore. That's the market cap of the company. Current price is 716, and stock P is about 19.9. Book value is 163. ROC is about 22.7 and ROE is about 27.8. Pretty good if you look into it. Company has reduced debt. Company is expected to give good quarter. Company has delivered good profit growth of about 33% in last 5 years. Tax rate is looking to be low. Company might be capitalizing on the interest. These are the cons. And company's holding has decreased. Promoters holding has decreased in last 5 years. That's a little concern. Okay. Now let's come down and see what is happening in the sales. Sales have been definitely going up pretty much steadily. And then I want to look at the operating profit margins that have been very, very healthy all this while. After that, I want to have a look at what is happening to the reserves. Reserves have been continuously going up from 467 to 5,733, which are a very, very strong growth in the reserves, whereas the borrowings have also grown. They have almost become 4 times. And then I want to have a look at what is happening from the cash from the operating activity. So cash generated is being very, very consistent, although there has been a decline in the March 22 year ending March 2022. Now let's have a look at the debtor days that have also gone down. And furthermore, I want to see what is happening to the promoters holding that has gone down almost by 4%. What is something interesting that holding has been transferred to FIIs. That's a very positive sign. DII is pretty much invested into it. There is no comment, part in it, whereas public holding has been steadily growing. Something more that I want to analyze, what is happening with their cash that they are generating from the operating activity. So they are, spending a lot of money in developing their fixed assets, which is a good sign, which is always a good sign. So some of the points that you can note here: ROC, ROCE, ROE, and CAGR, growth CAGR of about 33%. Borrowings have increased, even the reserves have increased, and the cash from the operating activity has been pretty much solid. So let's go on to the next company, which is 𝐿𝐾𝐬𝐿, and let's see what is happening in 𝐿𝐾𝐬𝐿. 𝐿𝐾𝐬𝐿 is about a 13,500 crore company. Current price is about 26.33. Stock P is very high, it's about 60. ROC is extremely good, 33%. ROE is about 25%. And then let's come down. Company has reduced debt, it's almost debt free. Company has delivered good profit growth of about 35% CAGR. Company has good ROE and ROCE, healthy dividend payout. This is another added good point about the company. company's median sales growth have been very, very good. The only negative about this company is that the stock is trading 13.6 times its book value. So this is a negative point as far as I'm concerned. And the second negative point is that its P is very, very high. Let's come down to further and see what is happening in the rest of the parameters. Have a look at the sales. Sales have grown quarter on quarter basis, and operating profit margins have been pretty much stable. Have a look at the sales year on year basis. Definitely a huge jump in the sales that has taken place, and operating profit margins have been pretty much stable. What I want to look at the borrowings. Borrowings have been gone down massively from peak of 165 crores to 23 crores, and reserves have grown to 980 crores. A very positive sign. Then comes the cash from the operating activity that have been pretty much constant. And again, they are also investing some money in purchasing the fixed assets. Now let's come down to the debtor days that have gone down, and let's see promoters holding has slightly reduced. FIIs are not heavily invested, but definitely they have improved their investment in this particular company. DIIs are, have reduced a little bit of their holdings, whereas public has increased their holding in this particular company. Now, so let's just consolidate once again. The only drawback that I see in alkyl amine is that the stock P is very high. Otherwise, ROC and ROE and ROCE are very, very decent. And one more negative point is that the book value, the stock is trading at 13.6 times its book value. So that's another negative for me. Now let's come down to the third point, which is Deepak Nitrite. And let's see what is happening in Deepak Nitrite. So this is about 24,000 crore company. Stock P is very decent, about 23. ROC is massive, about 44.6%. ROE is about 37.5%. And company has reduced debt, it's debt free. CAGR is almost 87.12%. Now, by the time you must have decided, or you must be concluding, what could be a best company for you to invest. All the parameters are right in front of you. Company has given a good return on the equity, which is about 40%. The only drawback that is there is stock is trading at 7.25 times its book value. If you remember, alkyl amine was trading at almost like 14 times its book value, whereas Deepak Nitrite is trading at about 7 times its book value. Both of them are pretty high, but nevertheless, Deepak NTR is on a reasonable valuation. Then comes the quarterly sales. From 1,000 crores, they have gone on to the 18,872 crores. Then let me look into year-on-year sales. They have multiplied their sales almost like 5 times. Expenses have gone up, and operating profit margins have also gone up. They have been growing on a consistent basis. Reserve have massively swelled from 300 crores to 331 crores, which is almost like 10 times jump. And borrowings have declined, from 544 crores or the peak of 1187 crores to 315 crores, which is a very good sign. Then comes the cash from operating activity, which have been extremely stable. And let me have a look what they exactly are doing with the cash inflow. They are also spending money in buying some fixed assets, and they are also spending money in investments. They are also spending money in some investments. Okay, now they have sold some investment, but they are definitely investing in building up their investments. What is happening to their debtor days? They have definitely gone down. And let's come down to what is happening to the promoters holding that has been slowly growing. Have a look at the stable inputs from FIIs, and not only that, even they have slight portions of FIIs have gone down, whereas DIs have also gone down, and public share has kind of increased. So as of now, I'm sure you must have understood the parameters based on which I will be making my decision. One is definitely, but by what times the stock is trading. how much is the ROC, how much is the ROE, what are the borrowings, what are the reserves, what are the cash from operating activities, and I also want to see what is happening in their forward PE. So forward PE is a way by which you can find out whether the stock is fair valued, undervalued, or overvalued. So I'm going to take you to a slide where we will be talking about what is exactly the forward PE ratio. So if forward P is less than the current P, that means the stock is undervalued. If forward P is equal to the current P, that means the stock value is a fair value. If forward P is less than the current P, it means the stock is overvalued. So I have pulled out all the three companies forward P, and I'm going to figure out from there which stock looks the best. So RT Industries, if you have a look at it, 19.46, and the forward P is 28.7, which is higher. It simply indicates that the stock at this point of time is overvalued. 𝐿𝐾𝐈𝐓, the current P is about 59 and forward P is less. That means this is slightly undervalued. 𝐷𝐷𝐿 Nitrite, the PE at this point of time is 22.2 and the forward P is 21.47. So looking at these parameters, which are very thorough parameters, I feel 𝐷𝐷𝐿 Nitrite is going to get my first vote. If I want to rank it, this is going to be my first rank. Second rank is going to be to RT Industries, and the third rank is going to go to 𝐿𝐾𝐈𝐓. Right? That's how I will be deciding my investment. So what you can really do is you can divide your investment into three parts. Major part can go into 𝐷𝐷𝐿 Nitrite, second large part can go to RT, and the third can go to the 𝐿𝐾𝐈𝐓. This I'm telling you fundamentally, right? I've done the entire analysis, all the parameters, all the insights of the company, but sometimes what happens, the management of the company changes or they take some decisions by which companies can start performing better. So all three of them are top-notch companies and very, very nicely priced. So let me take you to the chart and show you how exactly they look like, right? So here we are. Let me just show you. So this is the weekly graph of RT Industries. Have a look at it. The stock peaked out on 18th of October, and after that it has been continuously correcting from 1156 to 676. So almost like 45% decline in the stock. You have a good opportunity to take an entry above 730. Very, very nice buying opportunity will appear. And if it goes further down, if it further goes down, see, now we are talking about investment. Investment doesn't mean that the stock is going to go straight. It may go up, come down, may go up, come down. So you have to have a plan for it. So in case it further goes down, you can accumulate more quantity at 570. The next stock that I will talk about is 𝐿𝐾𝐈𝐓. So here is the weekly graph of 𝐿𝐾𝐈𝐓, which also peaked out on 26th of July 2021. From 4,700, it reached to 2,600 or rather 2,500, almost like a decline of 45%. So here again, we have an opportunity to take an entry somewhere around 2670. In case it further goes down, you can take an entry at about, you can accumulate some more quantity at 2240. So this could be the trading plan for 𝐿𝐾𝐈𝐓. And the last one that we have is 𝐷𝐷𝐿 Nitrite. And let's just have a look at the weekly graph. The stock started, falling down from 18th of October. This hasn't corrected much. If you notice, the stock has not corrected much. And this place, which is about 1700, is a very, very strong support zone. So you can accumulate right now some quantity, but in case stock falls further due to some reason, market can move in any direction. But in case it corrects more, you can accumulate some more quantity at 1500, and best price will be to accumulate it at 1000 rupees, 1100 rupees. So don't worry about it. Keep accumulating and think that you're going to accumulate it for your kids or for your grandchildren. So wealth is only created when you have patience. When wealth is only created when you actually do your money management. So with this, I'll be signing off. My first priority will be Deepak Nitrite, then RT Industries, then Alkylamide. And I'm going to stagger my investment in all three of them. Take care. Bye bye. See you. In case you like my videos, you like my content, give me a thumbs up and keep writing your comments. I love to read them and respond to them. All the best. See you in the next video.